Today I'm joined by Ryan Littlestone, Managing Director of forexflow.live. Morning to you, Ryan.
Morning, Nick.
Right, let's talk about Great British Pound against the US dollar cable. We've read lots of stuff over the Christmas period. Okay, we had some fundamental analysts, Q4 suggesting it could go up to 140. We have the technical analysts, sellers for choice in Q4. We've had the Christmas press suggesting the hedges are now going long cable. And I saw a couple of sort of brokers have got a 148 target year end for cable. Right? Is it that straightforward for 2018?
It's never that straightforward, as we know. Forecasts are a funny thing. You know, people just pick numbers out of the air sometimes. As traders, real traders, what you do is all we can concentrate on is the price action. You know, whether it goes to 148 or 120, we don't really care. All we know is watching it and seeing what it does do, not what we think it's going to do. That's the way we trade. So, you know, cable, what can you say about it at the moment? We've got a little period of calm. The Brexit news is sort of on the back burner at the moment. That's going to ramp up again probably into March because that's when the European Council are going to decide the basis of the next trade plan. You know, we're talking about this following the Canadian model or something, or the Canada plus, whatever they're calling it. They want to get some sort of template out for a trade deal. And March is when it's going to come around. So apart from all the unknown headlines that may pop up in the meantime, we're probably going to wait for that and see how the negotiations are going to go around that to see whether it's a good trade plan or not. And that's probably going to be the driver for the pound for the rest of the year, you know, because if it's a good trade plan, obviously the pound therefore is then going to go up. If it's market negative, then we're going to see a big sell-off. So really, you know, trading at the moment, again, it's another pair we're seeing range bound. You know, anywhere between 134, 136 is pretty much the ballpark at the moment. So just trade what you see and trade what's in front of you.
Well, it's quite interesting. A lot of fund managers in Q4 were saying it was impossible to trade. It was impossible to take a view in cable. Is that still the case at the moment, 2018?
Now it is, yes, because it's not doing anything. As I say, you know, the news is pretty few and far between as far as Brexit goes. Before, back in probably from about November, late November, I started to trade the pound again, look to buy the pound into December because we had this deadline for the first round of negotiations and Theresa May had to get something done. I hadn't traded it really for the whole of 2017 because it was such a mess. You know, you get one headline from the UK and it would go up 200 pips, then you get retraction or comment against it from the EU and it go back down again. And, you know, it's just, when you're trading that sort of headline risk, I don't want to know. But into December, when you know there's a firm deadline that the UK's got to get something done to move on to phase 2, that's when I thought to myself, well, you know, the pound is now a buy because we're going to get something out of this. Something's got to happen. So again, I think the same thing is going to happen in March. It may be a little early to trade at the moment, but if the noises are that we're going to get a decent trade deal coming along or we're going to progress, then, you know, that might be a little buy to look at, just scaling small into the pound and run it into March. And then after that, again, we'll probably hit a neutral period until the next phase.
Ryan, as always, thank you very much indeed.
Thank you.